Good morning, everyone, and we're live. And apparently, I'm 1 minute late. Okay, so quick catch up with what's going on and getting a little context as everybody can see. I think we gapped up on Sunday at the open on news of a deal, of an EU deal. Hold on, I'm trying to pull something up here. There we go. We gapped up on news of an EU deal. Good morning, Boomer. And that was after 5 days of consecutive highs last week, but just by a little bit, a few points. Realized volatility is real low, and that's kind of it's both a warning sign and not. It's not a warning sign because as long as realized volatility is underperforming implied, which it has been, and the look back windows at different, volatility risk premium funds use and the volatility selling funds do, we're going to keep going up. Money's going to be allocated there. But once it turns around, then we're getting to the point where we're potentially fragile. Fragile doesn't mean a 20% correction. It could mean a couple, 0.5% or 1% down days. It could mean pullback chop. I don't know what it means because it's not baked into the structure yet. All I could say is that we're getting signals that are both bullish and a little bit potentially bearish once the music stops. Once musical chair stops. Okay. That said, we have the Super Bowl of earnings this week. Microsoft, Meta, Apple, and Amazon account for about 25% of the SPX weighting. Throw in Visa and a few others, and I think we're near, close to 40% of the market cap weight of SPX this week. And to account for that, the market is pricing in a mere 90-ish point move. So here's the move that the market's placing in with all that and with the tariff news and with the FOMC and with PCE and with non-farm payroll. And I'm not saying the market's wrong. Maybe we just chop and consolidate. Maybe it's all baked in. I'm not judging. I'm just saying, as a friend of mine says. And so that's what the options market is telling us. 6,300 on the bottom, 6,475 on top. Call it 6,500-ish if we exceed. Call it, I don't know. We'll look at the structure to see what makes sense rather than just randomly picking a number. Call it 50-ish, 80-ish. If we fail at the bottom. These funny looking bands are actually Macmillan volatility bands based on the VIX. And long story short, they're logarithmic change bands, whatever it is. Long story short, this is saying, according to him, volatility is too cheap. But that's not a sell signal until realized volatility comes back to 10 from 8. I'll go check his latest thing. So that's just another, little asterisk there. We're watching, no big deal. Now, some people are crying about the rally. It's too big, whatever. However, RSP, the equal weighted, just hit an all-time high. I think the other day, intraday, And so breadth is broadening. If we want to look at market internal kind of thing, 60% of the stocks are above their 20 daily moving average of the SP stock. So it's both not like it's only the Mag 7, and at the same time, there's still room to run. And there's a similar number for the stocks above the 200 MA. So, mixed signals is basically my takeaway. All right, I mentioned we have jolts on Tuesday and a bunch of earnings. PG, Visa, PayPal, Sophie for the meme traders in here, Boeing. Wednesday, we have FOMC, ADP jobs report, Microsoft, Meta, and Hood for the memesters. Carvana, I guess maybe you want to call it that. I don't know. Um, ARM and Qualcomm for the SPX, for the SMH people, for the semi folks. Thursday, we have PCE and a bunch more earnings with Amazon and Apple rounding it off. And Friday, we have non-farm payrolls with ExxonMobil and Chevron and the oil's names starting to report. So clearly, there's not much going on this week. Okay, now all that said, let's take a look at. Now we got the bullshit out of the way. Let's look at some trades or where we are. Okay, so let's start off with options depth with the option market maker's position number, and just as a quick review, to the right is market maker long. Think of that as support and that is resistance, but I don't like those words. These are reaction zones. As we head toward here, market makers are mechanically buying. As we head toward here, they're mechanically selling, but it's mean reversion in, let's just take this one in isolation. As we head up here, they sell, and maybe we stall out here at whatever number that is, 40, let's just say, because then they've been selling. But then as we pull back, they start buying again. So we get this drift toward the large zones on top and drift toward the large zones on the bottom because the opposite happens. As we head down to this zone, let's call it a zone, let's call it a 90 to 6405, 6400 zone. As we head down toward this zone, market makers start buying. But then as we head away from it, then they start selling. So there's a big fat Greek dance going on in here. And we have these stacked market maker shorts, which here they hedge in the direction of the move. So let's just say we bounce from here and they start buying, buying, buying for here, but selling from here. And we have all these crosswinds. But looking at this in isolation, 30-ish would be a top, 35, whatever, somewhere in here, which just happens to be by a grand coincidence, we topped out at 25. Now, I don't believe that market makers are actively hedging every tick here. I do believe, and I've heard it from people who know, that large positions and large risk in the overnight session are kind of hedged out. So we gapped up. Clearly, there was some market maker buying that had to be done based on whatever like their risk parameters and all that are. And the obvious level that had to be bought was near that 25 area. And so that's my take on it. That's how I'm going to understand that. Okay. So I'm going to define the chop zone kind of narrow today. Oh, I don't want to see this one. I want to go to this one. Hold on. Let's go here. So here's the same thing, only viewed in like a table view. And so in my note, I made, I think, 95 the chop zone. We can call it 90. If you see, here's a position number between '05 and all the way down to 70 with this little notch at 75. There's a lot of market maker long. So market makers will be buying into this move. So it's going to be kind of hard just from this point of view for this to break. Now, if IV increases, that changes the strength of the hedging response. And so some of these levels should break. 90 is roughly where we closed Friday. We kind of like we're fighting for that 95. We had interesting pin action on Friday, which we did, I think, just in like for my subscribers. We didn't do it like on YouTube. And so we'll call the job zone over here, 90, 95. We'll call it 95 because should we get down toward here, we should see some buying. Okay, so within the job zone, moves down toward here should be, I think, will be bought as we head back up toward this level, toward the 10, 15 level, kind of what price action has shown us. There's really nothing going on here that conflicts with that. So the '05, this level is being bought. I probably define the bottom of my chop zone a little narrower than I normally would. We have a gap fill, dust off your gap fill rules. Everybody's got them. And so far, the gap seems to be holding. It hasn't totally filled. Some people say it has to fill. Some people say it doesn't have to fill. I say it doesn't have to do anything. It's going to do what it does. And we just watch and react. And we have this whole area here where we have the market makers long supportage area. And we have up into this area your potential scalp area. So from here is, a 10 point scalp should be pretty easy. Price action kind of tells you the same thing. So gamma and price action line up. We like that. We like that. So what are some of the downside levels that matter? Well, the expected move when I looked before put us down around 63.80, and I didn't have it marked. So that would be one. I have a section in my notes I call levels and lines, and 80 is a level, a line somewhere in here. And if you just look again, price action wide, we kind of been messing around that area. Below that, we have that 70, which is kind of the bottom of the support zone. Now, this is pretty strong, but 70 is kind of the bottom of that support zone, and 65.60 after here, the complexion kind of flips. After here being like 65. And what do I mean by that? It flips. But once we get down here, well, let me change this. Okay, this position number, good. Once we get below the 60 level, if we do, which would be way outside the expected move, then you have a stack of market makers short, which pull us toward that level. Here you have a stack of market maker longs pulling us toward that level. So butterfly zones, 6,400, 64, whatever on top, 35.25, with somewhere here in the middle being one fly. Another fly you can think of is in this area, kind of a big area. So maybe somewhere around 90.95, 6,400. Good morning, Selena. You made it, yes. And so those are potential fly areas. And I have a little more detailed roadmap laid out in my daily plan. So, for example, if we get above the chop zone, if we get above 15, then we would expect some acceleration into that 25 area. We would expect some acceleration into here. Not rocket science. If we get above here, that's not a time to fade the move. That's a time to sit back and watch. We could easily go from here to here where we start to stall, and you consider it from there. Somehow, if we get over here, maybe we could ride the momentum up to here somewhere, and then we kind of stall out. We always have 50 round number to keep our eyes open. So now, as far as iron condors, some people have been asking me for more explicit iron condor levels, so I kind of put them in my daily plan. Oh wow, the credits I put in are totally wrong. I think they got the decimal places wrong. Anyway, so ignore the credits, people. And so let's just look at some. So the conservative ones would be somewhere around 60 and 40, 50 cents, not bad. And that's predicated on the fact that all this is going to hold. And you can pick 70, you could pick 80 even, but 60 is a pretty good conservative level. So I like that. So I'm sending that in right now. Boom. On the call side's trickier. I don't really like selling into that into that negative gamma market makers short speed, so we zoom up into that area. But gun to my head, I know there's always a gun to my head, right? 55, not crazy about it. Here, there's no juice. I'll put in one for fun, for a miracle. I'll put in one up here, 50 cents. I'll add another contract, turning it into a fly-looking structure, into a BWB. And that doesn't pay. Turning into a BWB here like that. A broker wing butterfly. And I'll wait to see about playing in the upside. We could easily stall out up here. 65.60. I think that's pretty good. Let's see. That's decent. That's decent. Yeah, that's decent. So danger zones or flip zones, we'll call it 64.30 on top. We can really run. So if you're selling calls and you see 25.30, you might want to think about how you might want to adjust that. Um, on the bottom, if we break down here, then time to go long puts. We have the 6,400 gap fill zone. We have 80 was Friday's low, I think it was. No, well, what was Friday's low? I got that somewhere else. So the structure favors a range, I think, between 80, I mean, 70 is the lowest part of the range. I don't think we get down there. Let's say 80 to 64.15. Major defense at 70-ish. If 25 breaks, expect a fast move to the upside. And that's basically it. Is a weekly, okay, so good question. Now let's talk about that. And let me start off with saying, well, some people look at the level from close to close, so let's just say, if we wanted to look at the level for Monday, we would look at the close Friday to the close and use that for Monday. Some people look open to close or where we are now. So there's no right answer, but it does change, especially for the weekly. I like to use the weekly level and see how things have moved. So let's look at that. So again, the weekly level is 75-ish on top, call it 80, whatever, and 6,300 on the bottom. Pretty narrow. That was on Friday. What's the weekly level today? Well, let's take a look. The weekly level today, we pull out our handy dandy option chain, and we see it's 81 points from here. And here we'll just call 6,400 for government work. And we'll be lazy and we'll go 6,400 minus 80-ish, minus 80. So 63.20 bottom. So the bottom of the expected move has come up along with price. Price has come up and so has the move. And 6,400 plus the 80-ish is 6,480. So the structure has shifted upward, not dramatically, but as you follow the structure walking up day to day, so what happened last week, and I don't have it written down, as we were grinding higher, the top of the structure didn't change much, except maybe on the last day. What changed was the bottom came up. And of course, the big day, well, actually, not of course, surprisingly, no, not surprisingly, I guess. The big day is August 1st, and you see it's a 12 IV. FOMC is 11. That's pretty low for an FOMC. But I think we know that they're not raising rates. The whatever market, bond market, I guess, whoever it is, has priced in a 66% chance of a cut in September. We have Waller and Bowen, I think. We have two Fed heads that said they would cut rates in July. Whether they actually vote that way or not, we don't know, but that'll be interesting. I got the numbers somewhere. The last time we had two members dissenting the majority view was technically a long ass time ago. I forgot when, but long ago and not often. Doesn't happen much. And pretty much, if that's going to happen, then the next time they're going to prevail. And that's it. Like I said at the beginning, I'm going to Minnesota, so I won't be playing pinball, but I'll be watching along from the phone, either at the car or at the airport. And broadcast next week for YouTube and Twitter. I'll do them as best I can. I'm not sure what the technical setup is. I'm going to be in Blue Earth, Minnesota, population 6 cows. And so, no, actually more, because the Airbnb we're staying at has got about 15 or 20 cows, like right, my backyard's got cows on the other side of the barbed wire. I'll take a picture. I'll send it for those of you. It's fun. And the family is about 10 minutes away in Frost, Minnesota, which is literally, I think, a population of 300. So that's where I'm going. So I'm saying that to say this. I'm not sure about the internet there. I'm not sure about how things are going to go. I do know, now I'm here, I'm just talking to myself and everyone wants to listen. I know that when I'm away on vacation, away from my setup, my 6 screens on my main computer and my side laptop with a couple of screens and my iPad and my this and my that, my trading tends to be a little shittier. I don't have, like most of us, I think we're all used to looking at certain time frames, charts laid out a certain way. There's no right way or wrong way, I think, to lay out the charts or to lay out whatever it is. It's what your eye gets used to, so it tells a story. Something's going on, and I glance to my upper left to the chart there, and I see oil, the advanced decline line of the S&P 500, the tick of the S&P 500, and the tick of the market, and I glance there, and it tells me a story. I also have the dollar and TNX there, so just for fun. This is more in a trader psychology point of view, I think. Is this the screen I'm trying to get? Let me see. Yeah. So I'm sure others have dashboard. That dashboard's on the screen in my upper left. You see I have 6 screens in my picture? Yeah, I really do. So I'm just going to glance here when price is doing whatever. I'm not going to watch it like a hawk. And I'm going to see, oh, the tick is at a tick extreme. Am I thinking of selling calls? Now might be the time. Am I thinking of getting out of calls? Now might be the time. Oh, and is that confirmed by the tick on the S&P 500? Yeah. And the advanced decline line on the S&P 500, what's it showing me? Here it's showing me everybody's all dancing in unison. It's kind of at an extreme. And we have an extreme tick over here. And at that same time, we got the dollar at a low. And we've got what was going on at that time. And we've got interest rates at a low. So kind of looks like that's the end of that move. Glance. I don't have the luxury of glancing there. And so there's a little bit of uncertainty, a little bit of what, a little bit of hesitation, less intuition and automatic pattern recognition, more having to think through the process. And, sometimes that's just not as good for me. So that was just, maybe it was a quick reminder to myself as well. Yeah, more cows than people, exactly. I think here it's an equal weight. It's the equal weight cows and people index. But the cornfields have it. Apparently, Minnesota, not far from Iowa, has got a lot of corn. Oh, and there's an apple orchard right in the backyard. I don't know if you call it orchard, a bunch of apples, apple trees. And so you throw the apples at the cows and then they come and eat them. It's fun. All right, everybody. I'm going to sign off now. And those of you that are subscribers know I'll be doing the screen share and all that stuff that I do. I'll be twittering a little bit because I like to Twitter. I'll be chatting and whatever. So take care. Have a great day, and let's see what happens. Thanks for watching.